So let's find out what the way forward is at a time when fintech is the buzzword and the likes of Paytm are looking to list. Did you know that there are a couple of already listed fintech players? These are names like GRO Capital, backed predominantly by private investors, and Paisa Digital, that has the SBU Group as a large investor. We speak to these two fintech players to understand what makes their business tick, their revenue model, and how they look to grow and thrive in an increasingly competitive environment. So Shantanu Agarwal, the Deputy CEO at Paisa Digital, and Shachindra Nath, the Executive Chairman and Managing Director at GRO Capital, join us now. Gentlemen, morning to both of you. Thank you so much for being with us. Mr. Nath, I want to start with you. You know, we were just having this discussion about how fintech companies could perhaps be a threat to traditional banks. But what's also happening now is most of the traditional banks are partnering with fintech companies to sort of, move forward in that space. But you tell us, what is your own USP? What kind of customers do you attract? And what do you see is the opportunity in this space now?
Yeah, thank you. GRO has been designed to build India's largest small business financing platform. While we are an NBFC, but the way we look at this, that our whole premise is being able to service, underwrite, originate a customer, which is difficult for a traditional or a conventional bank or a large NBFC to service. When we look at the global world, you will see that small business financing, what we call SME financing in India, it's not an homogeneous sector. A dentist and an IVF clinic are two different type of businesses, but lenders continue to underwrite them on the same format. We use data analytics and deep technology to solve that problem, but we also make sure that our physical infrastructure is supporting that digital underwriting. I would say that as far as the small business financing is concerned, you would see in next 3 years, the small business financing would reach to the same level where consumer financing is today. Today, when you walk into a Chroma store, you can buy an AC, get it financed, and take it back home. And SME financing would reach there in few years' time. This is because of the tripod of data, which I call GST, banking, and bureau. The way it is maturing, the India Stack 2 would power the credit for SMEs in a very, very big way. With respect to threat or collaboration, we continue to see that lending institutions like us, which are backed by very sizable capital of more than 1,000 odd crore, we continue to see a very massive collaboration opportunity with large banks. We have already partnered with Bank of Baroda, it's a 1,000 crore lending program which has gone live. Soon we will go live with SBI. And the reason why large lending institutions are partnering with us, because they understand our middle way of being a very enabled fintech player, but simultaneously using the prudence of conventional underwriting and protecting the balance sheet. So I would say it's a very exciting space. I don't really see that their fintechs are a threat to conventional banks. Banks enjoy trust in India. Trust brings liability side to them, and lending institutions like us have ability to solve for the credit problem.
Okay, let's bring in Shantanu Agarwal in the conversation as well. Shantanu, morning. So explain your business model to us as well, and the fact that you've got this, co-origination model with SBI, where I think, 80% of the income from that loan goes to SBI, 20% to you. So aside of this partnership, give us an overall color on your book, the lending that you are doing independently and the tie-ups that you may have, like the one with State Bank.
Good morning. Thank you for having me on the show. So if you look at the Indian market, we have a population of 130 crores. Against this, we have 6.5 crore people filing for income tax. And then if you look at the unique credit history database that is available in the country for credit and fraud, we have a database of around 7.5 crore people. Against this, we have issued 42 crore PAN cards. So why this discrepancy between people filing for income tax or having a credit database versus people having their own PAN cards? So this discrepancy primarily came when a small borrower, typically looking for around 25,000-30,000 rupees, goes to a bank and asks for a loan. The bank manager or the branch manager would typically shoo him off by saying that, oh, are you on the formal sector? Is there a way for me to determine your income? Is there a way for me to process you on the formal network? And this borrower would obviously say no. So a small income generation opportunity came up with these guys, wherein you would see a lot of people sitting on, say, Sansad Marg or Nariman Point, and they would have these small boards saying, 50 rupees, get a PAN card. And they would typically sell these PAN cards saying that, if you have this PAN card, you will be able to get a loan from the bank. So this is the discrepancy between the 6.5 crore and the 7.5 crore and the 42 crore. So if you subtract 7.5 crore from 42 crore, you roughly come with a figure of around 36.5 crore. This is basically the untapped, underserved population, bottom of the pyramid population, which we are targeting in terms of our disbursements. If you multiply 42 crore with just 25,000 rupees, that is their monthly per annum requirement for starting their own self-employment journey, income generation journey, you come into the yearly market of around 8 lakh crores. So the opportunity here in this space is huge. In terms of a co-origination tie-up, which is now known as co-lending from a revised circular which came in November of 2020, it's an 80-20 model. Basically, 80% of the money comes from SBI, 20% of the money comes from Pesalo. And then there's a blended rate offered to the borrower, which is one of the cheapest in the market at 12.4%. So Pesalo is able to maintain their names, Pesalo is able to maintain their interest spreads, and as well as utilize the low cost of funds of the bank. And the bank is able to utilize the low cost of operations of an NBFC, combine it together in order to provide the lowest and the best cost.
Shantanu, we are aware about the co-lending model. What I was trying to understand is, for you, how much of your book is these co-lending partnerships, and how much lending are you doing standalone individually?
Okay, so the AUM currently is around 2,300 crores. Out of this, close to 200 crores is in this co-origination or co-lending. The remaining book is our own book in our GLG model, IGL model, which is individual lending for income generation, GLG model for joint lending groups, and the sum of the spaces secured MSME book.
Okay, from a viewer standpoint, the viewers that are watching you right now, of course, they want to know that which are the traditional banks that have successfully tied up with fintech companies to or partner or simply partnered with them for new products, thereby having sort of a fruitful addition to their legacy model. Shachindra, I wanted your thoughts, because you said that they're not a competition anymore. When fintech companies entered into the financial space, it was thought that they would be a competition to traditional banks, but now that fusion has happened. So which are the large banks that have successfully sort of adapted to the digital, to new digital technology and have tied up successfully with fintech companies?
Yeah, I'll just take 1 minute in terms of we have to understand the Indian psyche, right? Because we are a savings market. Majority of our savings go either in 3 asset class, gold, real estate, and bank deposit. When it comes for people to deposit their money, they end up going to the banks because the trust factor of a bank not failing in India is so high. And over a period of time, RBI and government have made sure that that happens. The liability side spectrum would continue to be driven by the large banks, and it's a factor of trust and brand. Now, the innovation part of it, it always happens from a lending institution, which is a fintech or an NBFC. And that's why I said that the times come when you see the collaboration rather than competing, because one would provide the money, other would provide the services. Second, you will be amazed that in our experience, both with State Bank of India and SBI, while it has taken time because it's very complex, but both of them, in terms of their ability to adopt our credit policy, integrate through technology, and create a smooth process and bring the cost of lending down for an SME borrower, has been a very, very successful experiment. So I would say that today, where we see almost every large banking institution, and I'm not talking about the private sector, but at least in the public sector, is looking to partner with fintechs. It would take some more time, but I think so you will see this happening. If you look at our platform called GRO, we have 4 tech platforms, the GRO Extreme platform, where we are automating credit. On one side, we are actually bringing smaller fintechs, NBFCs, payment platform on our platform. On the other side, we are bringing large banks. So eventually, we should be able to create a smooth, low-touch platform wherein a large bank not should be able to co-lend with us, but should be able to co-lend with any of our fintech partners who are on our platform.
Okay. Let me ask you this, Mr. Nath, that, recently we got to know that now Google Pay is going to tie up with banks and start offering, some format of deposits, fixed deposits, using a fintech platform. So there's a lot of disruption going on. But when a giant like Google decides to move beyond payments and look at perhaps other parts of the financial landscape, isn't that a threat for you? I mean, I know here we are only talking about the lending model right now, but overall, how do you see the entry of giants like Google maybe even eventually Amazon in this space?
So you have to look at two ways. One, even Google Pay Equitas partnership is actually beneficial to Equitas, where their deposit base would grow in a segment of the market which otherwise was not available to them. So Google's access and getting a small retail deposit to Equitas at a very, very low cost benefits the entire banking system. So I don't see that as a threat. Now, as it has happened in the West, you may think that Google Pay itself can become a bank. I think so that would be a little far-fetched in a market like India, because banking in India is still very tightly controlled. I don't think so that we have a regulatory disposition wherein some of these large players would be allowed to become a full-fledged bank. They may maximum go up to payment bank status. So I actually think that the way the market is opening, the retail investor, which is a deposit maker, has now an ability to put its deposit without getting into the hassle of going to a branch and depositing his money, and the market would explode from here.
Okay, well, we've run out of time, but it was really an interesting discussion on the opportunity for banks with fintech companies and what the way forward could look like. Shantanu and Shachindra, thanks so much for joining us. Let's get back to the market. By the way,